So to go over the answer to the Power Strategy 2 question on the previous page, let's take a look at the chart. So this is a Strategy 2 chart here. What we first want to do is identify the trade. So pause the video and see if you can identify the ABCD that we're going to be taking a reversal trade on. Did you get it? Well, here's the ABCD. We have got generally uptrending price, and although that is not that apparent from the chart here, we can see that the MAs are all pointing upwards and all trending up, so price beforehand must have been trending up as well. So we've got an ABCD down move, so we're looking for a long trade there. We're going along with the MAs, and so where are we going to be entering? Well, our entry is at the D point as shown, so we're going to be buying at the D point. Our stop is placed 50% of the C to D leg away from the entry, as there is no recent pivot low near enough. So as we can see, this pivot low here is actually above the D point. That doesn't really help us at all, because we want to obviously have a pivot low that is lower than the D point to put our stop. So we can see that there's nothing in the chart that is a decent distance away, and that is actually below the D point. So we will be using our 50% rule and taking 50% of the distance of C to D and putting the stop that many pips below. What about our moving to break even? Where would that happen? Well, that will happen when the profit in the trade equals the risk we've put on in the trade. So this distance here. So if we just look at these little dotted lines there, we can see there's 1, 2, 3, 4 dotted lines there. So 1, 2, 3, 4 dotted lines in profit is where we have a 1-to-1, meaning our profit in the trade equals the risk we've put on in the trade in terms of how many pips we're at risk. So that is where, when price reaches this point right here, that is where we will take our stop from here and put it up to the entry price. And by now you understand that when we move our stop to the entry price, we're putting our stop at break even, meaning if price comes down from this point now, down below the entry price, we're not going to lose any money. We're going to just exit the market at the entry price. So we'd enter and exit at the exact same price, hence not losing any money. But in this case, we see price does carry on going up. So what about our exit? Well, with the Strategy 2 trade, we are trailing. So what I want you to do is pause the video. I want you to trail the way that we're supposed to be trailing and see where we would actually exit the trade. Pause the video now. Okay, so I hope you get this right. We're going to be trailing with pivot lows. Why pivot lows? Because we're in a long trade. And so we want to be moving our stop up as each pivot low forms. So where would we exit? We exit here. Why? Well, if you see here, as we're going through this, our first pivot low after the break-even price is here, this red bar here. So after this green bar forms, we would move our stop from here up to this red low here. Then we see as we go on that the next pivot low is this red low here after this green bar forms here. So we would move our stop from here up to this red low. Now there are no other pivot lows that form, and we see price comes back down below that stop price, and that is where we exit, where price goes below our stop price. So how do you work out risk reward? Well, here we can actually see this. It's actually quite easy to work out the risk reward. Why? Because instead of actually putting in the digits on the right, the actual prices, we can see with the dotted lines how much our risk reward is. We can see here we've got 1, 2, 3, 4 dotted lines worth of risk. And in profit we are 1, 2, 3, 4, 5, 6. Approximately 6 dotted lines. So if we've got 6 boxes of profit and 4 boxes of risk. Now I'm saying boxes, it's just the exact same thing. The denominations between each, the price denominations between each line is exactly the same. So you don't really even need to know what the price is. You just need to know the amount of reward and the amount of risk relative to each other. So we know there's 4 on the bottom and there's 6 on the top. That equals a 1.5 to 1 risk reward. So I hope you got that right. If not, then please go back over the previous module. I need to make sure that you're understanding this as I go through it. And if you don't, then you can go over all the other examples that we're going to go through and hopefully it drills in. But there may be some fundamental things that you are not understanding at this moment. And the best thing to do is probably to go over the previous module and make sure you grasp the concept. And what you can do is just continue over to the next page and we'll go through another example.